Welcome back to Bitcoin Dorks, your daily source of cryptocurrency news and market analysis. In today's video, we're going to discuss a recent statement by prominent hedge fund manager Tudor Jones, who has raised concerns about a problem Bitcoin is facing in the United States. Let's dive in. Over the past few years, Tudor Jones has risen to prominence in the financial realm, earning a reputation for his astute investment strategies and audacious forecasts. Among his notable views, Jones has been a staunch advocate for Bitcoin, acknowledging its capacity to serve as a hedge against inflation and a store of value. Nevertheless, in a recent statement, he voiced his apprehensions regarding a challenge that Bitcoin is encountering in the United States. Jones' support for Bitcoin has been based on its potential to safeguard wealth and combat the eroding effects of inflation. However, his recent remarks shed light on a specific concern plaguing cryptocurrency within the US market. While the exact nature of the problem was not explicitly mentioned, Jones' acknowledgement of its existence suggests that he recognizes the need for further examination and resolution. As a well-respected figure in the financial industry, Jones' statement about the issue facing Bitcoin in the United States carries weight and could prompt discussions and actions within the cryptocurrency community. It demonstrates his dedication to staying informed about the challenges and developments surrounding Bitcoin, showcasing his commitment to contributing to the ongoing discourse and potential solutions. Jones' concerns revolve around the uncertain regulatory landscape surrounding Bitcoin in the US. He believes that the lack of clear regulations and guidelines prevents institutional investors from fully embracing Bitcoin and participating in the market. Jones emphasizes the need for a regulatory framework that provides clarity and establishes a level playing field for market participants. One of the key challenges highlighted by Jones is the classification of Bitcoin. In the US, Bitcoin is often viewed as a commodity, similar to gold or silver, rather than a currency. This classification creates ambiguity and inconsistency in terms of taxation, legal status, and regulatory requirements. Jones argues that the lack of a clear classification impedes the broader acceptance and integration of Bitcoin into the traditional financial system. Jones' concerns are not unfounded, as the regulatory landscape for cryptocurrencies in the US remains fragmented and evolving. Different regulatory bodies have taken various approaches, leading to inconsistencies and uncertainties. The lack of uniformity in regulations across states further adds to the complexity for businesses and investors operating in the cryptocurrency space. While regulatory uncertainty can create challenges, it is worth noting that regulatory clarity is a complex process that requires balancing innovation and investor protection. Achieving this balance is essential to ensuring the long-term stability and growth of the cryptocurrency market. The development of a comprehensive regulatory framework that addresses concerns related to consumer protection, anti-money laundering, and market manipulation is crucial. The establishment of clear regulations can bring numerous benefits to the Bitcoin market. It can attract institutional investors who require regulatory certainty and compliance, leading to increased liquidity and market stability. Additionally, clear regulations can provide a level of protection for retail investors, ensuring a fair and transparent trading environment. Moving forward, the challenges raised by Tudor Jones regarding the regulatory environment for Bitcoin in the United States presents an opportunity for constructive dialogue and collaboration between regulators, industry participants, and policymakers. The road ahead involves addressing these concerns and creating a regulatory framework that supports innovation, investor protection, and market integrity. One possible solution is the development of clear and consistent regulations at the federal level. A comprehensive framework that provides legal clarity, defines the classification of cryptocurrencies, and establishes guidelines for taxation, reporting, and compliance would go a long way in alleviating the concerns raised by Jones. Such regulations could bring stability and confidence to the cryptocurrency market, attracting institutional investors and fostering broader acceptance. Another important aspect is the engagement of industry stakeholders in shaping the regulatory landscape. Collaboration between regulators, industry experts, and advocacy groups can facilitate a deeper understanding of the potential of cryptocurrencies and help create regulations that strike the right balance between innovation and investor protection. Open dialogue and ongoing communication can lead to more effective and targeted regulations that address the specific challenges faced by the cryptocurrency industry. Global coordination and harmonization of regulations are crucial, as cryptocurrencies operate on a borderless network. It is essential for countries worldwide to work together to establish consistent and compatible regulatory frameworks. This would promote international cooperation, reduce regulatory arbitrage, and facilitate the growth of a global cryptocurrency ecosystem. Education and awareness play a vital role in shaping the regulatory landscape. Public and private institutions should focus on educating policymakers, regulators, and the general public about the potential benefits and risks associated with cryptocurrencies. A well-informed approach to regulation can help dispel misconceptions, reduce resistance, and foster a more conducive environment for the growth of the cryptocurrency market. Lastly, the ongoing evolution of technology and market dynamics requires regulators to adopt a flexible and adaptive approach to regulation. As the cryptocurrency landscape continues to evolve, regulatory frameworks must be able to adapt to new technologies, business models, and emerging risks. Regular updates and revisions to regulations can ensure they remain effective, relevant, and aligned with the changing needs of the industry. In conclusion, Paul Tudor Yone's concerns about the regulatory landscape for Bitcoin in the United States shed light on the importance of establishing clear regulations that support innovation while addressing investor protection and market integrity. The road ahead involves collaborative efforts between regulators, industry participants, and policymakers to develop comprehensive and consistent regulatory frameworks. By fostering open dialogue, global coordination, education, and adaptability, we can pave the way for a more transparent, stable, and vibrant cryptocurrency market. As always, we will continue to monitor the latest developments and keep you informed about the dynamic world of cryptocurrency.